Okay, welcome everybody to this evening's XAUUSD webinar, Forex Trading Live Market Analysis. That's tonight's webinar. Before we get into it, just to give you a heads up what is coming up over the coming week for webinars. Tomorrow we have how to become a consistent trader. We're taking you through trading plans, journaling, logging your trades, looking at trades statistically over a series of trades, how you can pull all that together. That's tomorrow's webinar. And then more analysis on Thursday, the 11th of May. All right, so that's what's coming up. So analysis tonight. Now, before we get into it, if you can read through the risk disclaimer, that would be great. And if you're on our YouTube live stream, I cannot see the chat, but I've given you a link there that you can use to come along to the webinar. If you want to jump in and ask questions, you're more than welcome. All right, so if everybody can read through the disclaimer. Just leave that on there just a little bit longer, so some people are coming in. All right, let's move along. Now, if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at XAUUSD Securities, and I'm a full-time trader. I've been trading the Forex market now for more than 15 years, mentoring for more than 10. If you want to contact me, my email is down screen. Through the week, you can connect with me on our website. Go to the Market News tab. Look at my analysis there. We're at our YouTube channel, XAUUSD Securities Australia, and you can connect with me on Twitter and LinkedIn as well. Those are my handles. And you can get access to our Telegram channel, where we're posting analysis too. To get access, contact Nathan Bray. I'll put his details in the chat in a moment. If you want to get access to my MT4 templates, layouts, and indicators, then just contact Nathan too. So I'll put his details in the chat. If you want to set up a demo account, he can help you with that. Or if you've got a question about setting a live account up, he can help you with that too. All right. All right, let's get into it. So we have a few risk events coming out this week. Let's get it to the news. US CPI data tomorrow, Wednesday. Okay. Expecting on the month-on-month, a rise in CPI. So if that's the case, of course, then the Fed's going to be thinking that they still need to probably raise interest rates, because how are they going to keep inflation under control if it keeps rising month by month? But in any event, it's going to be very volatile at that time. Difficult to have a trade open if you're just opening it. Need to be in profit and managed by that point. Then on Thursday, the risk item is the UK interest rate decision, plus then we've got the US core PPI. Similar kind of deal, a measure of inflation. All right, so that's what's coming up over the next couple of trading days there to worry about. All right, let's get into the charts. We'll have a look at the dollar index first of all. We're on the weekly chart now. This is the fifth week that we're testing this area down at the bottom. Well, the fourth week out of 5. One was an inside week, but we're still getting support down there. Weekly support 101.28. We're dipping down below, but we're not breaking the base there. I don't know whether we are going to break the base, because we probably should have broken it by now. Something, will have to really happen with the news this week for that to break. If the US CPI data comes out upticking, that'll probably shift the dollar index up. So, in the value chart here, we did manage to put in a higher top last week. We're kind of creating maybe a double bottom here. So once we get below 101.28, there's not much acceleration down there at the moment. So we're maybe bottoming down here to move maybe up to the top of the range. And we could stay range bound for quite a long time if it really wants to, or we could break south. There's always a chance we could break south, but at the moment it's just consolidating. And on the indices, this area I've highlighted is all the weekly tops. Still structurally monthly lower top there to a bottom. Sideways consolidation, topping out around about the 79% level. What I'm noticing is on the day chart, we have, we went up to a new high, up to the weekly top here, and then dropped down to a fractional lower point there. Back up to test the 79% level. So are we topping out? It'd be nice if we could just get a clear break of trend. It's very range bound at the moment. All right, so range bound on the indices there, range bound on the dollar index. Maybe we're just shifting a bit of a change to the downside on the S&P 500, a bit of maybe a shift to the upside on the dollar index, maybe just fractionally. All right, why don't we jump into the euro dollar first of all? And this is at least 50% makeup of the euro dollar. This has been moving down today. And we did fail yesterday. Let's go to the day chart. In fact, we should go to the weekly chart. And for those that are new to the webinar, I've been looking at this range for the whole year. For the last 4 weeks, then 5 weeks, including this week, we've been holding at the 79% level of the trading range of last year. We could be putting in a significant top up there. We've tested it on 3 candles, and we can't close above on a weekly basis above 110.33. Now, there was an opportunity to get short maybe at the 110.33 level yesterday. Didn't come up for a retest today. So we are moving below 110.33. Came back up yesterday to test. And today we are testing support, 109.73. We're at 10 pips above at the moment. Been great if we could just break support and start to see a clear downtrend. We have kind of a potential triple top forming up here, but we're not getting a massive breakdown at the moment. But what we are seeing is it doesn't want to exist too long above 110.33. The 4 hour, there's your there's your day chart level of support. You can see how range bound it's been. And we may well just stay like this through the course of the next 24 hours. So if you're more of a bull, you could be looking maybe that you want to be buying on support here to trade back up to 110.33. Here's your 15-minute. So clearly at the moment, 109.73 is holding it intraday over the last hour. Personally, I've got a downside bias with that monthly chart look, and I'd be much happier shorting up at 10.33 if you could get back up there. Or I'm not going to short it into support anyway. So I'm not really that interested about trying to get long here, but depending on what your bias is, this is support, and it could clearly move all the way back up to 110.33 and give that a retest. But I'd much prefer to be a seller as a trade entry, and I'd be looking up. Of course, it has to go up to get there. So you could say, well, why aren't you buying then? But I don't know if it's going to get there. This could just come up to 110 and fail. So if it was to get up to 110.33, up to 110.35 up there, I would certainly be watching that area. But I don't know whether we can get up to that area today now. Now that we've traded down to support, we might see this erode down through the course of the next 12 hours or so. So I'm not seeing an opportunity to sell that. I don't like to sell too close to support. And I just have to be patient for an opportunity that I like. So I'm not seeing an opportunity that I like at the moment. Up here would be an opportunity that I would like, but not down here. So I just have to be patient. Now we might see a clear break of 109.73 over the next 24 hours. And we may then be watching let's say the CPI data comes out good for the US, or we simply break below 109.73 today. Well, tomorrow 109.73 then could be resistance, broken support becomes resistance, and then that might be a level that I want to entertain to trade down from. But at the moment, I'm not going to trade into it. So up here would be my area to watch if we could get up there today, but I don't know if we can get back up there now that we've continued to move down to a new low today. Euro yen. Now, on the weekly perspective, we had a very negative candle last week. And on the monthly perspective here, we've hit a level that we haven't been at for best part of 15 years. Pretty much traded to the pit there. 151.70 monthly resistance, and we false broke this monthly top. And we're asking the question at the moment, this monthly top, can we break below 148.39? We're actually trading below there right now. All right, so negative weekly candle last week. We're putting in a lower top here on the daily. Now it's still getting some support from this top over here. It would be nice if we could trade down today away from that top. That top's at 148.39. And then tomorrow it would be perfect if, let's say we trade down today. So, trading down. And then we can get a rally. You can draw a fib in on the 4-hour chart. And, potentially you can, it's always great when the fib tool can line up, say, with a 62 level at that monthly area of resistance, and you're just waiting for that overlap to be resistance on a rally back to trade down. So to me, that level is not really broken yet. I'd like to see a break below and then a retest during the week. So I'm just watching to see if that can occur. All right. Because at the moment, theoretically, if I just get rid of all that, the day chart here is still in an uptrend on the bigger swing points. Top to higher bottom to a higher top. This is a higher bottom. This is a minor top at the moment. Could become much more of a significant top, but we could, by the end of the day, simply be closing back above monthly and daily potential support here. All right, so what I want to see is a nice close below, and then looking for a rally back up to 148.39 on the 4-hour chart, if that can start to occur over the next couple of trading days. If that euro dollar sinks, that's going to help this move down. So I'm looking for that to move down, and then a rally back up, and then a failure potentially, if that can come together. So usually I have a game plan for every pair that I'm watching. Doesn't necessarily come around, but I have a process that I'm wanting price to do a certain thing. I don't like to trade in support. I don't like to buy into resistance. All right, so that's the euro pairs. I go to the pound pairs now. Now this is still in an uptrend. We have hit a significant area of weekly resistance here and monthly resistance. If you go to your monthly chart, I like to go left and I just pick out the next level. So the next level, that level is just there at the moment. An old low back in time, that's at 126.61. And this high is at 126.67. Now, if you get good at identifying these levels, I know these levels off the top of my head. I'll look at them all the time. I could have told you what those levels were, even if the lines went on there. So, I mean, we could be holding there for the long term. We've had about 9 to 10 weeks up here. It's due for at least a pullback, but this is in an uptrend here at the moment on the weekly, and it's in an uptrend on the daily. But you can see there, put in a signal day yesterday. Now, if we are going to get any more than a little bit of a pullback at the moment, 125.83, that top needs to break, because that could just be support for the next move up. All right, so we haven't been down to that level at the moment. What I did notice is, if I move it down to the 15, that was the range of yesterday. We have a bit of a cycle back up within the range to about halfway, and then we've moved down. So what I like to look for in a perfect world when we get those signal days is that price can come back up to the 62 to 79. Now, we haven't done that. So I don't see an opportunity for myself there to be a seller, maybe in line with a pullback down to support here. At the moment, we could be getting support here at 126 to move higher. So if we are going to get a move down to maybe test 125.83 at the moment, I would look up to last week's highs here, 126.52. We got about 16 pips above that yesterday, and the 79% level was there. So, I would entertain looking at this to move up to there, to then move down to challenge support. Now, we might challenge support without rallying all the way back up there, but I'm not going to sell anywhere near support. And I can quite clearly see at the moment that that 126 level is offering some intraday support at the moment. So I always have to sell higher up. If I can't, I'm just watching. All right. So at the moment, trend is up. So if we came down to 125.83 today, you could most definitely look down at this level to be support, and then can it reverse back up and trade back up to test, where we've come from on Monday. All right, so levels to watch, depending on what price does. If it moves down to day support, watch that level to be support. If it can come back up to last week's high before moving further down, that could be an opportunity to sell, to trade down to support. Now, through the course of the week, if we do decline down, just want to drop to the 4-hour chart, we've moved above last week's high. This is last week's low, so I'm monitoring that whole range. We could pull back to the 62% level, just monitoring where price we get to through the course of the week. Depending on what the CPI does, we could, trade down to the 62% level of the new high for the week down to last week's low. Overlaps with a daily level of support, 125.25. All right, so we're a bit overextended at the moment. We could get a nice pullback within the range of last week. But watch the support levels. Don't be selling too close to support, because support can be support, and then you'll just have price going against you. So some of these pairs at the moment are not in the perfect positions where I want to trade, but I'm just giving you an overall view of what I might be looking at through the week. Pound yen had a perfect, lovely failure up here at monthly resistance. There it is. Now we are at higher bottom, so we could be moving up, putting a higher top. Weekly trend is up, but that's well overextended. Might need a 1 or 2 week dip before it can get down to lower prices where buyers want to come in to push it back up to test resistance. On the daily, theoretically, this is in an uptrend. A little minor lower top could be forming here, but on the big swings, bottom to top, higher bottom, that happened just above support. Now, for me, I'm just being patient. What if that was the final failure here? We may well come up for a retest. So I'm just monitoring to see if we can get up to the higher level of the fib tool. There's last month's high, 79% level at 71.41. So I'm just watching to see if we can maybe retest 172.13, 171.41. Can we move back into that area? And then what does price do? Now, I might not be able to get up there, but I'm always looking at the high levels for failure. All right, so and the point I want to make is, if you're trading at the 79% level or higher, let's say we get another retest of the resistance high and then we fail once more, trading up in that area to then trade down, if that's what price wants to do, that's how you're going to maximize your risk reward. All right. Trading around this 50% fib area right now, let's say you think, oh, I think this is going down and you trade now, that does not create you the best risk to reward. Patience will create you the best risk reward if price can get up to the 79% area up here, or even higher than that. All right. So just monitoring to see if we can get a stab up there. When we get the CPI data coming out tomorrow, it's 24 hours away, we could stab up there. And if you're ready, get your chart set up, knowing that we failed up there last week, we could once more fail up there again. All right. So that's what I'm watching at the moment. A lot of pairs I'm just watching. I'm I'm not that interested in taking a position unless I think I can get it to at least a good break-even perspective with some profit ahead of tomorrow's news announcement, because that's going to be very volatile. Over the last few months, CPI day, when the data gets released, the 15-minute candle for the first 15-minute candle on the release can be 100 pips, high or low. So you have to know when to trade and when not to trade with the volatility of the market. All right, let's move left, Aussie yen. Now this is the larger range, which, let me get rid of that on the fib, which we came up to test. March's high, there's March high there, there's February high, there is January high. So we came into an area of highs, monthly highs. All right, look at the failure that we got. Now we haven't been able to get back to that level. Now we might get back to that level when the CPI data comes out or not. But you can see we kind of false broke the 79% level, fell down. And then on this upward move yesterday, we only closed at the 79% level. And we could be now failing at the 79% level to trade all the way down. And on the smaller swing, this is like the retest rally. There's another 79% level there. So two 79% areas there, making a good area to sell today. You'd already be, if you had that area marked in, you'd already be in profit. All right. Now, this area could be supports, 90.77 down to 90.51. I thought it was going to be resistance, but we clearly moved back above. So now moving into that area, if you did get short in this area, get your trade to break even, then see whether it can break down. We've already been up nearly 70 pips from that 79% level. You really could already be at break even. Traded that 79% level today, you could have already stopped above the high. Seeing the best part of 70 pips profit already, you could already be at break even. All right, close to 70 pips we've seen. Been a fraction short of the figure at the moment. Now, if you still want to get in, the move down today is that range there. You could monitor that range. 62 level, it's close to the central pivots. 79% level overlaps with all these 50-minute highs here. All right, so it might offer you another opportunity to trade up there at the 79% level, which is where my mouse is just there, or that 50-minute 79% level. It might come back up there to give you another opportunity, but you may have missed the boat. For the best level today, Aussie dollar. Now, I think we're very range bound here. Let me get rid of that line. We've got quite a few lines here, but from that top, 67.71 up to the weekly high, 68.04. There's tops to the left, 1, 2. There's another top just above there. There's all resistance there, and I'm just looking at that as we're getting quite range bound. There's the top of the range, which we've been a little bit short of. And, there's the bottom of the range. Now, if we've already failed, I like to, we didn't perfectly hit the top of the range. We missed it by about 6 pips, give or take, maybe a few pips less than that. But you can't trade right at the top of the range. Then what I like to do is try and get in by the 79% level, stop above the high to trade down to the bottom of the range. So we're at the 79% level now. So if you like this as a range and you think we're failing up here, selling at the 79, stop above the high, targeting the base gives you at least a risk reward of 1 to 3, if not closer to 1 to 4. All right. And it doesn't matter if you're right or wrong, because if you keep taking that same strategy time and time again, you will be right. Even if you're only right 50% of the time and then you meet your target, you're going to be, when you're right, you're going to be making approximately 4. And when you're wrong, you're going to be losing 1. So over the course of 2 trades, one win, one loss, you're going to be up 3, aren't you? And you don't even have to be right 50-50 for that strategy to work. You just have to employ it and keep rinsing and repeating. All right. So I was hoping that we get a retest of 68 for you guys and girls today. I put that on Telegram, but it never quite got that high. All right. Now, over the next 24 hours, maybe it will come back up for a retest. So watch up to 6,800 to 6,805. See, 6,805 is last month's high. So we've come all the way back up. If I go to the monthly charts, can't really see it on this. It's got too much rubbish overlapped. But if you went to your monthly chart, you'll see that last month's candle pretty much finished on its low, because last month's low was here. And then we've traded all the way back up inside the candle, but we haven't traded above the high of the candle. So we may have just gone all the way back up inside the candle of last month to then trade all the way back down the whole range of that candle. All right, so you need to make a decision. We're at the top of the range, starting to trade down. Do you want to trade down from the top of the range? What do you want for your trigger? All right, the euro pound, which has been rather range bound, maybe is breaking down. When we look at the higher time frame, we're trying to move below this monthly top at the moment, and we've put in a lower top to that top. We have a higher bottom, so it's a little bit mixed, but the fact that we formed a lower top may mean we're moving down to test this support. 85.47. So if we can now break below that monthly top, that is your long-term target. That top there is at 87.21, 17 points, 17 pips below there at the moment. All right. So it's been rather range bound for quite a while. We could just simply break to the downside aggressively. And the weekly trend here is just starting now to be a lower top, lower bottom. It's been equal bottoms, but now it is showing you a downtrend. So shift in sentiment there. If you look at the euro dollar and the pound dollar's kind of holding its strength a lot more than the euro dollar. So that's why we're seeing that move. Now, we may not hold below weekly support, monthly support here in the short term. What I'd like to see, if we are, what I'd like to see is a good day move away from 87.22, so that, let's just drop down to my 4-hour chart, we get a good move away from 87.22. So the 4-hour trend at the moment has a really good move down. There's a clear move below 87.22, and then you can look to sell your rally, being 87.22 resistance, trade down from. All right, because if we are clearly breaking 87.22, we've been in a long range for a while, there are going to be people that have bought at 87.22 or around the area, and they're still bought at the moment. At the moment, they've got the fingers crossed, hoping that price will come back up, and they have the opportunity to get out. And when they get out, they're selling. So the more that we can break down before coming back for a retest, the higher the chance that that does now hold as resistance for a continued move down. So look for a clear break, and then a rally back to the area of the break. Okay. All right, cover the euro yen. We'll just see what it's doing. Just want to drop it to the 15-minute. It is on a 15-minute chart basis here, starting to show that it does want to be resistance at 148.39, but I'd much prefer to see that move away from the area and then it comes back. Still got every opportunity of moving back above there at the moment. All right, euro dollar, not wanting to move below 109.73. So if this starts to move up, that euro yen will probably move up. That's why, look at pairs that are correlated together. If the euro dollar is getting support and you think you've broken support on the euro yen and we haven't broken it by too many pips, that moves up 30, 40 pips at the moment, the euro dollar, the euro yen will follow suit, and then you'll be back above support. All right. New Zealand yen. To the daily. Now, I'm going to go to the weekly and move to the monthly. We're on a downtrend here on the monthly, and we have actually moved above some resistance at the moment, which I was expecting to potentially hold, but clearly it's not at the moment. But one more day and we could be back below the levels that we're moving above at the moment. So just want to show you the position here that we're trying to get above the 62 level at the moment of that range. But just because we're trading above some broken areas of resistance, there's a weekly top here, a weekly top here, and a daily top there. We've been pulling back today, testing that daily top, but this is quite overextended on a daily chart move here. This isn't where, you know, this could be support to move higher still, but when it sticks its head above a whole bunch of resistance levels like that yesterday, it can often then simply the next day drop back below all the levels. It's like it did here. Moved above a weekly top here and another top there. Moved above a double top area there. Had a small day here. Still hold, you know, it came down to test the level, but held above. We had a small trading day and then down it came. So if we have a very small trading day here and we have a loss, even though we're above day support 85.40, I'd be concerned that we're going to get price action like this at the moment. Because I'm a study of price action, and I just see it repeating all the time. There's a very good chance of a false break there. Now we could hold on support to move higher, yes, but experience tells me that we could end up seeing this move back down. All right, so I wouldn't be getting caught just buying right now, sitting on top of there. I'm just waiting to see what price wants to show me over the next few trading days. If you go to the 4-hour chart, you know, if the 4-hour chart kind of consolidated here, right? And then broke north, then of course, then you can start to consider a pullback to trade higher. All right. But if this just starts drifting down below these levels, that's not good. The buyers need to hold that in play, push it up to a new high, so you have another swing point up on the 4-hour and a higher bottom form above this bottom. If that forms a bottom below that top now, that's weak. All right, so you're just going to understand when to fight the battle and when just to sit there and to see what the next couple of days brings. All right. All right, New Zealand dollar. Does this not look kind of similar to the Aussie dollar? So weekly perspective, that's not a significant weekly top there, but it's an area. These are day chart tops there. So what we have is an area of resistance there across those tops. So I'm just going to draw it in a bit better. I'm just going to use the weekly top as a starting point. That whole area there, and I know that it overlaps with 62 level there. Been fractionally short. It's rather range bound. It's a bit like the Aussie. I mean, they could say that's a higher bottom area to that bottom, but we might now move, you know, we could put in a lower top here. So go back to the weekly chart. You know, that's the top. We're at lower bottom, lower top, higher bottom. We could go lower top here. We could false break that top, or we could move through that top to come up to this area here. But at the moment, unless we can clearly break that top, we haven't traded the top yet, we might just stall here. All right, we could just simply stall, and we could, like the Aussie, you know, we could be having top of the range up here. bottom of the range here. And we haven't got to the top of the range, so we could still challenge that this week, depending on what the CPI data brings. Or, you know, we may have already topped. Just want to know where the 79% level is. So if we start to move back below this top, which is 63.14, got your 79% fib at 63.21, you know, moving back below those two price points would definitely be suggestive that we're then moving back down the range. All right. That's a very significant top, this one. This is when the New Zealand dollar rose interest rates by 50 basis points when we're expecting 25. So it's a very significant high point. It's not just based on price action alone. It was a news event. So we may not be able to take that. That's last month's high to last month's low. Like I was saying on the Aussie, we're just trading back up inside the candle of last month. We can't take out the high. We could trade all the way back down to the bottom of last month's candle. So look for your setup to sell if you can see it there. Right, at the moment on the 4-hour chart, I think the 4-hour chart's still holding to an uptrend. So I'm just waiting for a breakdown, price action at the moment. And this area here, last week's high, that top area there, little mini double top on the 4-hour. Price breaking back below, you know, just watch for price to go, can it break below? Does it then come back up to retest, trade down? All right, so you don't have to get too ambitious about getting short all the way high up. Just wait for price action to change its delivery. So it's still in an uptrend there on the 4-hour chart. So it could still come up for a further test up here, but I'll be watching up here for sure for failure. If we don't get up there, I'm just watching for the structure to change at the moment. I did notice we do have some news coming out. I think it's on Thursday for New Zealand, or sorry, Friday, 1 p.m. inflation expectation. So, you know, that may have some effect for the New Zealand price action for sure. Be aware of that. All right, dollar Canadian. Now the weekly trend is getting a little bit mixed here. Series of higher bottoms and a lower top. That lower top happened at monthly resistance from over here. So you can see there on the monthly chart, it's range bound, isn't it? Higher bottom, lower top. Which way is it going? Higher bottom, lower top on the weekly. All I clearly can tell you is on the day chart, when we got down to the lower end, close to weekly support, we had a rejection yesterday. So now, as you're saying, what do I expect the pound dollar to do once the debt ceiling is renegotiated? Well, the pound's in an uptrend at the moment, so unless something comes out to shift the overall trend of the pound, we may just be gradually grinding higher at the moment. Unless something comes out. I don't know if the debt ceiling is going to do. I mean, the debt ceiling, when do they never not raise the debt ceiling? All right. So I think it's almost guaranteed that they're going to raise the debt ceiling. So I don't know if that's going to have too much effect on the pound dollar. The pound dollar at the moment is just in an uptrend until a price action wants to change the trend. It has hit as we were just discussing before, has hit a rather significant level of weekly resistance over here. So, you know, we could have a pullback from that level. Is it going to change the trend? We'll just have to wait and see. All right. All right, dollar Canadian. So we've got a hammer candle there. You know, if you're a pure technician just trading candlesticks, breaking above the high, that candle confirms a reversal. And when you move it to the 4-hour chart, there is quite a lot of imbalance. There's one there. And there is a minor one there, but then there's one in that candle too. So I'm just going to join them together. And there was one more in there. So I like to join all the imbalances together rather than just putting little piddly ones in. All right, so there's a number of imbalances on that move down last week that could be filled. So with that being said, as well, back to the daily, if you draw a fib across that range that we're moving back down towards, they're moving above the 79% level. Trading above yesterday's high would potentially signal a move back up to fill those imbalances. Now, my preferred option is always to try and be a buyer on a pullback. So what I would be looking at to see if it could occur today is, can we get some form of a 62 or 79% pullback within that rejection candle? So you buy the dip inside the rejection candle. 79 is always my preferred level to then see price move up this way. All right. Now, price might not get a dip of that significance, but that's always my preferred option, so that you're getting the best price and structuring for yourself the best risk to reward trade that you can. All right. Because for me, risk to reward is always the most significant thing that I want to be able to achieve when I'm structuring a trade. Because I've got no idea which trade is going to work when I take it. So for me, I can't go, I'm just having risk reward 1-to-1, because my next 5 trades might not work. And then I'm just going to be down 5. I need to have good risk reward so that when I'm right, my profitable trade can rub out some losing trades and add profit to my account. All right. So what it means is sometimes I'm watching a level to get in, or watching a level to hold, get to and hold before I think about taking a trade, and price doesn't get there. And I'm fine with that. All right. I don't have this fear of missing out. I want to structure the best risk to reward trade I can. All right, dollar franc. Now this is getting quite range bound here at the moment, but on the monthly chart here, we're very low. This monthly low just there, 89.26. We're fractionally below. We have been above and below. I mean, we could come down to the next level. You can see on the weekly, it hasn't been that nice. We had an outside candle last week, and we barely made, well, the candle did make a loss to the previous candle, but you can see the open and close was almost the same. So it's very indecisive. It's trading up for the week, it's trading down for the week. Week before, we closed above monthly support. Last week we closed below, but we traded above. Got weekly support here, 88.71. It's a little bit choppy down there. All right. I mean, it could be, if the euro dollar is putting a top in, then potentially the dollar franc could be putting a bottom in. But it's not easy going. And I'd prefer to wait to see a clear, well, I'd like to see a directional shift to the upside, but a clear directional shift. All right. Rather than getting stuck in this chop. So for me at the moment, the dollar franc doesn't present the best trading opportunity, but it's most definitely worth watching, because it could present a nice opportunity if price action starts to look a little bit nicer. The thing to consider with the dollar franc at the moment is at very historical low levels for the last 10 years, or even 10 years. So at historical low levels, often support will come in, and then you move back up to historical high levels. And we've only been really trading from, the low levels that we're trading into at the moment up to these high levels. It's quite consolidatory on the larger picture. So we are getting down into areas of support, and often, the Swiss central bank often doesn't like its currency to get too expensive. As this is moving down, the dollar is weakening, so the franc's getting more expensive to the dollar. So they can often come in to prop it up. So we're getting to the lower levels there of the 10-year range. Of course, we can break below, but do you want to be selling close to the lower levels of 10 years? I don't think so. Well, I don't. But price action at the moment isn't looking great. But if it started to look structurally nice, if we got a nice impulsive move up, and then if we can move above the 90 level, that 90 level becomes support, I could get excited about that pair. At the moment, I can't get excited, but it's just there to watch. And sometimes a pair is not that exciting. I don't like where it is, historically on a chart. I just wait until, it starts to become more exciting. Now, if this is a pair that you like to trade at the moment, we may well fail at 89.26 today. That's broken monthly support. 4-hour chart, if anything, telling me that it's a little bit bullish here, but you're trading into monthly broken support. For me, trading into broken monthly support, you're looking for the opportunity to short down from the area if you're wanting to trade that pair. All right, 89.26 would be looking to short down from that level at the moment until that level proves to be support. It's proven to be resistance intraday, and if I draw a fib from high across that range, it might stub up to the 62, but you can see why it's stopping there. It's just short of the 62. All right. Basically, it's stopping at monthly resistance. So trading as close to monthly resistance as possible, stop above, offers you then the opportunity of great risk reward to trade back down to the support levels on the chart. Okay, but for me, it's very low down. I prefer to see if we can get an impulsive move to the upside. All right, another pair that's at resistance. This is a prime example, dollar yen, of a level of resistance from back at 2001 that is being resistance right now. So if you go to the monthly chart, this high here is at 135.16, 2001. January 2001, I believe, was the date. Might just have to correct myself now. I'm going to double check it. Yeah, January 2002. All right, close enough. Although it's 2001, but the point I want to make is it's like 20 years ago, and that level right now is calling the intraday price action. So I've always got my monthly level of resistance and support, weekly level of resistance and support, because price is often trading around, and it doesn't matter if it's from 10 years ago, 20 years ago. All right, to the weekly chart here at the moment, we could be forming, it's mixed to, is it forming a double top? Here we've got a higher bottom, lower top. That's potentially a lower top if we don't continue up. I have been discussing that this could be a left shoulder, inverted head right shoulder. But at the moment, we haven't had a significant weekly reversal last week. And at the moment for the new week, we can't hold above 135.16. That's that monthly top. So daily, you have a daily top to the left here too. 135.12, 135.16. You have another area over here. See that monthly line? See how price has been respecting it for supports, became resistance, it moved above, it's back below, now it's resistance once more. That's the support and resistance. That's how it works around a major level. All right, so at the moment, break it down. It's rather consolidatory here, but any rally up to 135.16 over the last kind of 36 hours now is quite clear to see here on the 1 hour chart. You're just getting met by the sellers. So that's a very respected level of resistance at the moment intraday. So if it gets back up to 135.16, you start to see it falter. Maybe that's a good intraday level to trade. 79% level there, 135.19, 135.16 is your resistance level. Could be a good level to trade down from if it was to get back up there. At the moment, it may not get there because price is moving down, but that would be, This is how I come up with my levels. That's clear level of resistance from the monthly chart. It's proven. Failed, failed, failed. Tried to move above it early Asia, failed. Can it come up for another test today? It tested it yesterday 3 times. Slav, so your point is the level significance there because of psychological level or economic? Psychological. I don't, because personally, I don't know what the economic reasons are for the dollar yen. So it's a price points from historical back in time. Just because let's say you're a novice trader, just because you don't go back 20 years to have a look, doesn't mean to say that level 20 years ago isn't respecting the market right now. It's just that you haven't gone and had a look to see why the market's stopping where it's stopping. You know, another example on the same topic, if we go back to the pound dollar, go to the monthly chart, this low here from 5 years ago, 126.61. All right. The weekly high that got formed there last year was at 126.67. Then we've come all the way back up to it yesterday, and we traded at 126.68, 7 pips above that monthly level. So, and I don't know if there's anything economically telling us to sell the pound right this minute. So it's not economically, it's just price levels that the market's respected back in time. And, you know, if you're coming up to a level, often you can come up to a level that hasn't been touched for many years, and then price just stops at that level and then reverses. It's like the one on the euro yen at the moment, last week, where we got fractionally short from back in 2008 here. All right. If you haven't got it on the chart, you don't know why price is stopping, but we stopped last week 9 pips short, and now it's moved down 450 pips to the lowest point. You know, and say, is that the stop there just randomly? Same, yep, exactly the same as saying, same as gold. Gold is stopping where it's stopping at the moment. We can move on to gold now because that's the last pair to go through. Gold is stopping where it's stopping because it stopped there twice before. And so it's a historical high. You know, that was the all-time high until last week, where we just fractionally traded above. But when you get to these significant levels, there's always a high chance that price is going to reverse. Whether it's going to be a long-term reversal or it's a short-term reversal, but there's always a high chance of a reversal. Whereas a worse scenario, you can get the risk out of your trade and then it's a break-even trade. But you know, last year when we came up fractionally short of that, look at the trade that came from it. You know, now I don't know if we're going to get the same trade, but you know, we've been at that price point 3 times now. We had a nice decline once. We had an even bigger decline the second time. We might even have a larger decline the third time. This is what happens at significant levels of support or resistance. All right. All right, so we know that we have traded fractionally above that. I don't class that as the monthly trend turning up. I just class that as equal highs, possible double top, triple top. The weekly trend is up, but I wouldn't be focusing on what the weekly trend is now. I'd be focusing on what the day chart tells you. Can the day chart hold its trend? At the moment, yes, it's still got a higher bottom to a higher top. But if this chucks in a lower top, this is then getting ready for a move down. So I would just be monitoring at the moment for the day chart to, can it chuck in a lower top? Now you could move to the 4-hour charts. This weekly level, 2032, so that weekly level, sorry, my apologies, it's that daily level there, where we're below. It's only a minor level that, but it got false broke there. We moved above. It did act as support on the low of that candle. So it is a level worth watching. So on the 4 hour at the moment, it's going to turn to up if you break that high, but then you're trading into resistance. But personally, I would just be putting a fib across that high to low and seeing if it can get driven back up this week to 79. Can it come up to the 2070 level, the 2074 level for another test? Because if that gives you another test and it fails once more, then it gives you a chance to sell very, very high up for the potential of a reversal. All right. Another level to watch, the last month's high overlaps with the 62 fib at 2048. So there's a couple of levels there. It could be that level to watch. I always like the higher level because it always gives you better risk to reward. And it does mean that I miss out sometimes, but you know, for me, being a trader and showing profit as a trader isn't how many trades I take, it's how many I can get at those 79 areas that offer me the best risk to reward structure. It's like that. I don't know what's going to happen on the Aussie yen at the moment, but structurally, where I pointed out the 79% level today, which we're already below it, so you can't go back in time. Just here, 91.73. Let's say you trade at 91.73, stop above the high, let's say 10 pips, 91.73, stop at 92.53, that's 80 pips of risk. Let's say we trade down to retest that fib low there. That's 560 pips. That's a risk reward of 1.6. All right. And that's what you want when you're trading. That's how you structure high risk, high reward to your risk trades. Now, and taking that trade, you know, from a day chart perspective, is if this moves down 100 to 200 pips, you're break even by that point. You got nothing to worry about on that trade. It's going to work or it's not. But you've then structured great risk to reward, and you don't have to think about trying to get in on a tight entry, and it offers you great risk reward. You know, same on that euro, same on the Aussie. I don't know what the Aussie is going to do. This could blow straight through that top, but if this trade was to work at the 79% level here, what if this fails at the this fails here, and when it comes down to support this time, it breaks and comes down to test monthly support down here over the next 3 months. That's great risk reward. Okay, that's how you can. Just selling where I was suggesting, stop above the high if the trade works, gives you a risk reward of 1 to 4 just to the low here. If that was to come down to even this 2% level there, that would be a risk reward of 1 to 8. And you could even class at the moment that potentially we may have on the Aussie here, you know, you can class this as a double top, even though it's in a range at the moment. All right, that could be a double top. And then if we break the support, the 200 level is your target, and that offers you potentially more like 1 to 9. If you get in at 79% level, so about 1 to 9, if you do the maths. All right. Matthew said it plays with your mind. Well, it's just, you know, just get used to it. This is, you know, statistically for me, this is where I'm most profitable. Is holding these sorts of trade setups and holding them for the long term. I can be in a trade for 3 months. And I know when I look over my results, my profitability comes from the longer term trades, not the risking 20 pips to try and make 40 pips. Is letting the market breathe a little bit, not getting whipsawed by just market reactions. All right. So some of these pairs at the moment are at good levels of resistance where they could break to the downside. What if the US CPI data comes out very positive tomorrow? That's going to be very positive for the US dollar potentially. So all this range boundness that we're getting at the moment is the uncertainty of what central banks are going to be doing moving forward. All right. Well, I think I've covered everything I want to cover today. Any final questions? Of course, as I was saying at the start of tonight's webinar, we've got CPI data. Let's go back to the news. We've got CPI data tomorrow. It's difficult to hold a trade with, if you're up 20 pips and the CPI data is coming out, you probably just want to close the trade because the candle will go 100 pips high to low. If it doesn't go your way, it's not going to work out very well for you. So, think about what trades you've got open, how much profit you've got. If you don't have a lot, from a risk perspective, it's probably better to close your trades out, let the event pass, don't get blown up by something not going your way, and then look for a setup afterwards. So get your levels ready. Like I was saying on the Aussie, I was looking for a retest on the Aussie today at 68 and it hasn't got there, but we could certainly retest 68 tomorrow after CPI. So that would be one level to watch. On the euro dollar, we could, I was hoping for a retest of 110.33. We could certainly retest that tomorrow after CPI data. We're only 50 pips away from that. So the 50-minute candle generally at the moment on the CPI data release is 100 pips. So before the market comes out, the news comes out, have a look where the 100 pip range is on your favorite pair, because the price can be moving 100 pips. So look to where you might want to sell down from or buy up from within a 100 pip range come the time. This euro is looking a little bit sneaky, like it might want to break through support today. It's not, that bounce is quite short at the moment, isn't it? What's the pound doing? Looks like a 62% retracement of that drop. If you're looking for a kind of a tight intraday entry on the pound. All right, guys and girls, I might leave it at that just to give you a heads up tomorrow. Tomorrow is not really about charting. It's about looking at, here we go, how to become a consistent trader. If you're not consistent yet, I'm going to go through a whole bunch of stuff that's boring. It's having a trading plan, it's journaling, it's reviewing, it's logging your trades, all the things that nobody wants to do because they think that's just a waste of time. And I can guarantee it's not a waste of time. It's going to tell you, you'll be able to identify why things aren't working for you. You'll be able to identify what is working for you. And then you can cut out what isn't working and hopefully just do what is working. All right, but if you don't have a structured approach to working all that out, then you can end up just going around in circles forever. You can end up being inconsistent forever. And why not make a decision to become consistent if you're not consistent? All right. So if you're not consistent, this webinar's for you. Edwin, you want notes for candle formation? Yeah, I can get you the PDF on the candlestick webinar. Hang on. All right, Edwin, I think it's that one I've just put in the chat there. If you go to that, pretty sure the candlesticks is in that webinar PDF. Then you can have a look at all the patterns. All right. Okay, everybody, thanks very much. Hope you got some levels you can work with. Be careful of the CPI coming out. And look forward to seeing you next time if you have the time. Thanks, everybody. Nzdjpy asking me for scalping, what pip stop loss and take profit would you recommend? Well, I don't scalp, but to me, scalping, you still need, I wouldn't want to risk more than 20 pips as a maximum from a stop. And I would always try to have at least a risk reward of 1 to 2 as a perfect scenario, okay? Hopefully that helps you. All right, thanks everybody.